Hi Anthony, how are you, buddy?
Excellent.
Good.
I'm only a
What a
couple
great,
minutes late
what
this
a
time.
great way to, what a great way to wrap the year with speaking to you. So
Yeah,
everyone, Anthony's with us. I really enjoy seeing your stuff come across my feed, Anthony. You know, your technical work is creative. It's also actionable and interesting. You know, you always have that kind of contrarian view, and
yeah,
you're a dinosaur like me.
yeah. You got
How
that
can't
right.
I? Thanks for
It's pretty
joining us, buddy.
pretty exciting trading, considering it's the holidays and nobody's really trading it. Mostly machines.
Yeah, so okay, when the human beings come back, I'm interested in what F3X Trader is looking forward to in 2016. One formation that comes to mind to me from our last interview is you had a broadening megaphone formation in the Dixie that projected a high into the low par range, and then the bottom line comes all the way down into the 72 level. A lot of people are still looking for the resumption of the bull market in the dollar. Has your view changed, or is it more confirmed with what happened after Draghi a few weeks ago?
I think the reversal's confirmed. It's not obviously not crashing. I mean, it could, but I think it's going to trade in a range, a high range, and that's going to hold commodity prices down. Um,
Okay, so do you know how to screen share, Anthony? You go up
yeah,
to
I
the left.
do. Let's pull
Yeah,
up
you
that
go up to the
chart.
left-hand corner, and there's that green box with an arrow,
Sure.
and then start.
Screen share right here. There, you got it.
Okay, so all right, and you had that formation drawn before we got up there, and
Right,
when we
that's the
got up there,
chart.
I started thinking about what you were talking about. To me, that was a nice failing rally after the Fed, but it almost looks like there could be some kind of ABC. This pullback is not taking out the recent low, and maybe we make one more attempt towards par. What do you
Well,
see
it
him?
looks like they bought the 50 day, but I wouldn't have done that. Wouldn't expect that to hold up. Um, I can show you. See, this is choppy trading going. It always is in these triangles,
Right.
and I can show you another view of the U.S. dollar, which would trade sideways, a longer term view. I'm not sure that that was actually a megaphone top. I mean, that's what it looks like on the shorter term view. Let's see, that's the view we're looking at. This would
Okay.
be sideways trading.
Right.
May not. I got another view that may be
Yeah, it
better.
looked like you were looking for 107 and a half or so for a five as or a B, and that would be C up there.
That would be C of B. So the dollar is actually in a bear market rally. Um,
Okay.
like a lot of stocks are actually only in a bear market rally from the '08 lows. You
Okay.
see, the Dow made new highs and the S&P made new highs, but the market in general, well, a lot of stocks are still stuck. Financials only rebounded off those lows. They're not in a bull market. But getting back to this
So
U.S.
you know,
dollar,
I'm confused about one thing. Okay. The dollar came off pretty good this week and from last week, and the S&P's rallied. What's your take? A lot of people think the problem for the stock market's going to be a continued strength in the dollar. I was thinking that U.S. dollar denominated assets would fall out of favor with a bear move in the dollar. What camp are you in?
that's confusing to me as well.
Okay, I'm not alone.
Yeah, it's inexplicable. This sideways could be wave four.
Okay,
I thought I had a better view. Oh, here I got a
so
bunch.
so the parity bears are finally going to get their way into early 2016 on the euro, according to your view.
Well, I think so. I think the euro's going to rally, and the and the U.S. dollar is going to sell off. European stocks look better than U.S. stocks, and I think actually that could lead. Except the DAX doesn't look good.
Well, I was talking about your previous Dixie chart that shows a rally back towards the 107 level, which is going to take out this kind of double top at par.
On the euro.
No, well, the Dixie. I mean, if you're looking for 107 in the Dixie, you should be looking for under parity in the euro, right? So which count
the VIX is pretty well contained right now, and the VIXie is just another VIX. But I want to focus on this U.S. dollar pattern. This see this this looks like the same broadening top, right?
Right.
Well,
so you're thinking we go to 92 before we make that that big move up towards 107.
Kind of a shocker of a move in a panic wave E, which is what a wave E tends to be, is creates a lot of panic. We haven't seen it yet. You know, it's a hard trade. You know, this dollar held up for how many, like 3 weeks, 2-3 weeks. I had someone on Twitter say my timeline was forever. Well, it's not forever, but you know, it's not easy getting short every day and nothing happens, and then all of a sudden you get this big move. Well, you saw that coming on the Fed news, or was it Draghi? Yeah.
Okay, so then your preferred count going into 2016 is dollar weakness, down towards this 91, 92 level. That should equate with about 115, 117 euro.
I think it wants to pull back, and but if that was a top in the dollar, I think we'd see it falling. And you know, I think maybe here's the view I was looking for. You know, this wedge here is a triangle, but that's wave 4, and these triangles are confusing. And we saw a retest the highs. I would expect again around this, maybe just above the 92 level. Right. But you can draw these any number of ways, and it's basically trading sideways. And if that continues, let's see. You know, if what we saw was AB going to the top here,
right,
then we could see a pullback all the way into this bottom blue line, which is the trend line. That would end the consolidation earlier. Then we see a final push up on the U.S. dollar. It just doesn't seem to be a major reversal. So I've almost ruled out that dollar crash for this year, but I expect it to pull back and kind of hold up.
Okay, all right, that's a nice view. I guess the other most go ahead, Anthony.
Oh, I'm sorry. Excuse me, I was coughing.
Oh, okay. The other market that's in a lot of focus right now is the crude oil, with people talking 30, 20, 10. To me, I think we're close to, we either did it this week or maybe one more shot down, or some type of bear market rally in the energy complex and WTI.
Well, yeah, last interview I was talking about the bottom in oil and thought we might have found it, and we got a good rally.
Yeah.
But it was apparent that it wasn't going to last, and it gave it all back in a hurry. And so now I've been bearish oil. See, this is commodities. I follow everything related with oil. So if commodities are trading sideways, which we see oil doing that now, past 2 days, we've got a little bounce.
So with the dollar coming off, we get bear market rallies in crude and gold, and then a resumption of the bear market in both
I think so.
Crude and gold and commodities.
Yeah, I think the Fed has done a good job of destroying the dollar, and that's gonna rear its ugly head, like in an obvious way, within the next year or two. Let's see if.
So if I'm reading you right, we're in wave 4 in the dollar, which is corrective to the downside. Wave 4 in crude, which is corrective to the upside. and then we have another sharp decline to finish both of them off. Sharp decline in crude and a big rally in the dollar.
It's too soon to say. I mean, this is the WTI, and you see it's traded into this blue triangle.
Yeah, it's a wedge to me.
Yeah, this wedge, this downturned wedge, which
Yeah.
It could go either way. It could be bearish. It could fall out of this wedge. It could. I usually look at
get a throw under the bottom line first.
Well, the bottom line was taken out. The Brent crude took out the bottom line.
Okay.
But that still doesn't mean. I mean, that could just be a throw over.
Right.
And we could see a big rally as it breaks out of the top of this wedge. I've got a bunch of different views.
Well, pull back in the Dixie to 92 ought to do that, don't you think? Oh, yeah, back to 60.
Yeah, right?
Yeah, so I mean, now that I look at your crude chart and your dollar chart,
we're seeing
looks like they're going to be correlated pretty closely.
You would think so, but we've seen some dollar. We saw some dollar weakness and no rally in oil.
I know that's true.
What's with that's I don't know if that can last.
Yeah, I mean, I saw a take. I forget who the technician was. That the euro turns before the crude, and so there can be a lag between the turn in the euro and the turn in the crude. Maybe that's what we're seeing. It could be
capitulation. Everyone's given up on oil, regardless of what the U.S. dollar does. But
yeah, they haven't given up on gold. It keeps holding 1040. What's your look there?
I'm sorry?
They haven't given up on trying to bottom pick gold. We held around the 1045 level a couple times. And the shares never made new lows in gold.
I'm still bearish gold. And if that dollar holds up, I mean, the dollar can pull back, but if it holds up in that range, it's just another reason to sell gold. But once the dollar reverses, I think it's going to be huge, and that could be a big moment for markets too. It's hard to imagine how that's going to play out, but it's going to be a big event. We haven't seen it yet.
Yeah, we have a lot. You know, I've heard a lot of people pointing towards this April 2016 time frame. Does your work kind of line things up for this spring?
Yeah, well, February, March, I think we could get another leg down in the market and maybe retest the lows. Here's just one less view on this WTI crude. We saw crude rally up and hold up here for 3 years, trading into a sideways triangle, and that looked like wave B, and then now it looks like we're in primary wave C. I haven't given up on a huge sideways pennant in oil, but it's kind of breaking down, and but this is the trend. So until WTI breaks out above this looks like
42
bucks, right?
Yeah.
You can't confirm that it's a breakout of the trend. So the trend is your friend. Oil could continue down this channel in a primary wave C to 30 bucks, so 25 bucks.
Okay.
I mean, but where's the momentum? If this is wave 3 of 3, why is it holding up? Well, it's holding up for the past 2 days because nobody's trading. So when traders return, are they going to put their oil shorts back on?
Are you a proponent that sometimes are you a proponent that sometimes the first week of the year gives you clues for the rest of the trading year? Some people look at each day of the week as being a quarter or a month in the new year.
Well, yeah, I pay a lot of attention to the time of year, and we saw what quadruple witching did, and but that's all that volatility was about. It spooked a lot of people, but in knowing how the market normally behaves, like during holidays on triple witching, you typically have more volatility. But as I updated the blog this week, calling for a Christmas rally.
I saw that.
Those
Nice
breakouts
call.
on the VIX were negligible because it happened on quadruple witching. It wasn't. It was like trying to break out, but it kept getting hammered down. And now, last I
Now
checked,
we're trying to break out. You think we'll break out over 2100? A lot of the even guys who are bearish are looking for 2200, 2250 first in the S&Ps.
let me take a look at the chart. I should let's see. I've got a couple different views and a possible sideways pattern. But we saw this rally extend further than expected off the lows in August, and I'm calling that wave A. And now I see it trading down. It's still trending down in this declining, contracting triangle. There's a possibility to go to 2120, but I'm not expecting a breakout to 2200. I'm expecting this range at the best. That would be a return to, I suppose it could go a little higher, and I'd have to adjust the top trend line. But a confusing sideways pattern after the rally of the past 3 years. The market's overbought and needs to consolidate sideways, and so we could see it hold up into the beginning of the year as money gets put back on the table, and even into February, March, and then another crash into the bottom of this pattern if this plays out. You know, a lot of people think the Dow is in a bull market, and I don't see how that's possible with the S&P is not in a bull market. The Wilshire isn't in wave 4. We saw this breakout here.
It's a tough call, isn't it?
Sideways, you know, it's kind of aimless, and that's typical for this time of year. And I find markets pretty unpredictable during the holidays because nobody's trading. You got short covering. A lot of bears won't even trade during this time of year. They'll close down shop. So I think we won't get a good feel for it until traders come back after the first. I think they've taken money off going into the end of the year, and that's probably going to be put back on. But I'm not seeing higher highs. I mean, I got a couple scenarios where that could happen, but right now it just seems to be trading sideways and consolidating lower.
Okay.
And let me show you the one view from it's a simpler view from my public charts. Here you see that downturned wedge. And I consider this either wave A or wave X in a continuing consolidation pattern, but the trend isn't up. I'm not calling this wave 1. I know a lot of people are calling this rally off the August lows wave 1 on the Dow.
Yeah.
And like industrials are supposed to lead. I don't really see that. So right now I'm just watching this downturned wedge, and I don't think it's complete. I mean, there's a possibility that wedge turns into a broadening triangle. Let me see if I can find that. Oh yeah, well that's on the short-term chart here. So this is the broadening pattern on the shorter-term view, and wave D could come back and make a new high going into the end of the year, or towards the end of the year.
Right.
And that would be a broadening triangle in wave B. Or well, I've got it marked. It would be X here, but this range or the range I just pointed out on the 60-minute chart. This is a 30-minute chart. I could show you what the Dow looks like. Let's see. Now here's one. The only way I can see the market going higher is if it breaks out above resistance into an overbought above the top trend line on the 20-year chart and holds up there before breaking down again, and it trades up into this megaphone top. But we're a long way from there. So I remain bearish. There's the Dow. There's a couple different possibilities for broadening patterns here, so I'm not ruling out a higher high.
Okay.
But we got to break out of this downtrending pattern here that we're consolidating. It looks like consolidation to me.
Well, if we're going to 92 first in the Dixie, I'm not sure if the market's going to construe that bullish because the oil could rally. That could help the market. Or it's going to be mean an outflow out of the U.S. stock market into emerging markets, et cetera, et cetera.
Yeah, I know. Well, some of the guys who are using analysis, they're not using technical analysis. They're using numbers and figures, math. But they're looking at a rally in emerging markets. I mean, I see a possible newer highs in emerging markets, but it seems like the U.S. markets are overbought.
Yeah.
This little consolidation here is where the Dow's gone the past few weeks, and so a lot of people are calling that wave 4 because it didn't break below this 16,933 level.
Right.
I just don't see that.
It's hard to make a lot out of any of the action this week as it being
This
kind of a confirmation for where we're going to go. Is that the major point?
Yeah, this week's kind of a wash, and pretty much just retail investors and short covering buying this market. And there's a possibility that when traders return in the end of the year, they're going to sit on their hands, but I think they're going to have to put money to work. So it could end up that this continues, and then they have to chase performance. But I still don't see us breaking out to new highs.
Okay. So, Anthony, thank you so much for your time today. People could follow you at 3X Traders, and I know you're on stockcharts.com. And did you want to show something else here? Go ahead. You're showing bonds.
Well, here's the Vel. There's one. That's not the right view. You mentioned the VIXI a few times.
Yeah.
Here's resistance on the VIXI. We saw that. Let's see.
Yeah.
August it hit 2097. So it looks a lot different than the VIX. And I don't know. It seems like they're manipulating the VIX, and because they know everyone's trading the VIX. But most floor traders are watching the VIXI, and pretty much this blue line is my line in the sand. And if we were to get back above that, like above 21, we're going to see a lot of panic.
21 line in the sand. It looks like it comes in a little lower than 21, but I see what you're talking about.
17 is resistance. But once,
It almost looks like we're putting in a higher low here in the VIXI compared to last summer.
Well, right here we're seeing a lower high. We're seeing
and from August we're seeing a higher low.
Yeah.
Okay, where that could be a C or a 3 possibly, right?
It definitely could be consolidating there. I mean, this is definitely an impulse in August, and I think that was no mistake. And we saw damage done. I mean, after reviewing it for a while, it took a couple months looking at a lot of different stocks. Stocks are trashed for a reason, and looking at the healthcare sector, I mean, it can't be repaired. I mean, I think that all happened because word got out that insurance companies were leaving Obamacare, and I expect that to happen. But Obamacare may not fail for another year or two, but I think that's going to be a big catalyst. I think that's why stocks were dumped and why we saw all the panic. The news didn't come out till later, which is typical.
Okay.
But everything was trashed, and then you see GE pumped to the moon. I think the market's rigged. I never used to say that, and I used to think, well, this is all emotion and emotion-based trades, and some of it is, even if it is being manipulated. Say the Dow is going to be treated like a bull market. Well, this is the people behind that trade, behind that idea, driving the market into a bull market. But I don't think it's natural. The market's not
Yeah, who
really.
are they? Who is it? The Fed?
Oh yeah, the Fed and the banks.
Plunge, so you're a believer in the plunge protection team? They must have come
Only
in on
only in a
Friday
market.
after Friday's close.
Oh, only in a market crash. Like when was it? 87 or when was the
Yeah,
crash? 80s. Was it 87?
yeah.
Well, they came in and bought market futures and bought stocks outright, and then the Fed said that they'll do that. Um, I don't. They and then in '08 they banned short selling of financial stocks and gave the banks nearly
Yeah.
$1 trillion and said go buy stocks. That's not a natural market. This is like no market anybody's ever traded in. You can't just treat this as a market that's um, that's rallying on human emotion. We don't see the economy reflect what we're seeing on the Dow. People aren't going out and borrowing money to buy houses, and I mean that was crazy. If you just go out and
So,
get a loan, and they encouraged you to borrow more because the
right.
banks were making more money the more you borrowed.
Negative AM loans, negative
Yeah,
AMs.
I mean
Yeah. So what do you think is
that was
going to,
natural.
what do you think will be the catalyst for these central planners to lose control of this rig market? You think it has to be some type of geo exogenous type event?
Uh, yeah, something huge, and right before the Paris attacks. But from what I was seeing in the VIX and in the charts, I thought I knew something big was about to happen. I was tweeting that the day of, or the day, right before that close. And but now they're talking about, well, the grid, the U.S. power grid is vulnerable, and looking at how long would it take to put that back up if it collapses. And I mean, I think they're kind of steering the news towards World War III. Even the Pope came out kind of bullish World War III over this
He's been
Paris
saying that
event.
for a while.
I mean, it's ridiculous. I don't. I think it's a story they're pushing either for the election or. But I'm expecting something like that, and not necessarily World War III, but something that looks like it. More attacks, more terror talk, or maybe conflict with Russia, like something. Not really sure what it's going to be, but it's going to be huge.
Yeah, what about the South China Seas with what's going on there,
Yeah, that's
fighting over
another.
that spec?
Yeah, and then nobody pays any attention to North Korea, who's already got weapons. And I think it's
Right.
probably going to be in the Middle East or Russia, and or possibly a grid attack. And if the internet goes down, what's that going to do to tech stocks? So
Yeah.
you know, I'm
What's it
kind of
going to do to
I'm a
everyone?
big conspiracy guy, so I think, well, they're planning this, and they're all going to make billions of dollars shorting tech stocks when no one else sees it coming. But I don't know. How about the 2007 collapse when they said financials were going to zero, and then what happened? The market held down for 3 months as they went long, built long positions, and then drove the market. A lot of those financials are trading 1,000 times where they were at the
Right.
lows. Was the financial system really going to collapse? There was, they did engineer the bailout and spooked everybody out of the market, and that's kind of what seems to be the plan: shake everybody out at the bottom. Um, Discourage the bears at the top. So I'm going to stay bearish here. Uh, I'm planning
Okay,
for the next
buddy.
2 years if it takes that long. But like I said, it's hard to trade. To come in every
Yeah.
day and short
So
it and
then,
wait and
so
cover
then,
your
everyone should keep my little jingle in mind. Use
what is
less leverage when you trade the markets, especially in this environment.
yeah, yeah. I don't like leverage. I don't like options. My dad was a trader. He lost his inheritance trading options. There's really no need for that. I mean, there's a place for it, I suppose, but when that leverage comes off, it comes off in a hurry, and you really don't have a say in the matter. Yeah, trade on less leverage until you get, especially until we have confirmation of a direction. Right now, the market's just kind of bounced back and held up. It's hard to imagine getting bullish at some point on a market breakout. I think I have one chart that shows a bull market, but I mean, it seems ridiculous the way the market's trading. Market breadth is lousy, and I think the August was kind of a shot across the bow. A lot of that money.
I've never seen a low like that hold up long term. It wasn't a reversal. It was just a huge down candle with all kinds of confirmations. On the RS, the low was confirmed no matter what measure you use. And normally when a low is confirmed, you could count on it being taken out again eventually.
Yeah, I think so. I don't think it was a fluke or a flash crash. I think we're going to retest it, and that was just the beginning of a larger correction, if not the beginning of a bear market.
Well, keep up the great work, Anthony.
Okay.
I really enjoy your work. What's the best way for people to keep in touch with you? You don't teach or do anything like that, do you?
Not too much. You'll learn something reading my blogs, and I've got a tutorial up there on Elliott Ways. But watch me chart, and follow me on Twitter at 3x Traders, and I provide alerts there if I blog or whatever. But the last month, I think I put up 2,300 or more charts. So
wow,
yeah,
you're a hardworking technician. I wish you and your family a Merry Christmas and Happy New Year, and I hope next year is your best year ever in all ways, buddy.
You too.
Thank you, Anthony.
Thanks for having me, and have a Merry Christmas and Happy New Year, everybody.
All right, thank you. That's Anthony Allyn at 3x Traders. He's my trading warrior brother. I encourage you to follow him and pay attention to this guy. Do not fade Anthony Allyn is my advice. Thank you, Anthony.
See you later.
Everyone thank Anthony for his time today.